This video is created by Jagrat Creations. It is on Departmental Accounts. I wish to solve one sum on Departmental Accounts. Observe the sum on the screen. This is the sum which I wish to solve here before you. This sum has been asked in examination, or this type of sum has been asked in examination quite frequently. Let me read the sum. Southern Stores Limited is a retail store operating two departments, X and Y. Company maintains a Memorandum Stock Account and Memorandum Markup Account for each of the departments. So Memorandum Stock Account, Memorandum Markup Account. Memoranda means they are the working notes. They are not the real part of the books of accounts. That's the first thing that you should understand, referring to the word memoranda. Supplies issued to the department are debited to the Memorandum Stock Account of the department at cost plus markup, and the departmental sales are credited. To this account. The markup account. Markup on supplies issued to the department is credited to the markup account for the department. When it is necessary to reduce the sales price below the normal selling price, that is cost plus markup, the reduction is known as markdown, is entered in the Memorandum Stock Account and in markup account. Memorandum Stock Account and in markup account. Department X acts as a markup of 33 and 1/3% on cost, and Departmental Z has 50% markup on cost. Now this first paragraph is important. Majority concepts of this markup account and Memorandum Stock Account that you have studied in branch account in stock and debtor system. The markup account that we prepare is just alike to the account, that is adjustment account that we have prepared in stock and debtor system. The principles of preparing markup account and adjustment account in stock and debtor system is at par. I am going to explain all these things after reading this sum. The following information has been extracted from the records of Southern Stores for the year ended on 31st of December 2017. Opening stock, purchases, sale. Stock of Department Y on 1st of January 2017 includes goods on which sales price has been marked down by rupees 510, and these goods were sold in January 2017 at the reduced price. Certain goods purchased in 2017 for 2,700 for Department Y were transferred during the year to the Department Z are sold for 4,050. Purchases and sales are recorded in Purchase Department Y and Sales Department Z respectively, but no entries in respect of transfer has been made. Goods purchased in 2017 had markdown follows. Departmental X cost 8,000, markdown 800. Department Z cost 21,000, markdown was 4,100. At the end of the year, there were some items in stock of Department Z which has been marked down to rupees 2,300. Very important point. With this exception, all the marked down goods in 2017 were sold during the year at the reduced price. During the stock taking on 31st of December 2017, goods had a cost of 240 were found to be missing in the department. It was determined that the loss should be regarded as irrecoverable. So where the loss is irrecoverable, it should be presumed to be a normal loss, because generally normal losses are irrecoverable. Abnormal losses for which you can go for insurance and it can be recovered. So here, as the loss is irrecoverable, it implies that it's a normal loss. The closing stock of both the departments are to be valued at cost for the purpose of annual accounts. You are requested to prepare each department for the year ended on 31st of December 2007 trading account. The trading account that we prepare is a part of books of accounts. The Memorandum Stock Account and a Memorandum Markup Account is a working note that will reflect that the profit found out by preparing markup Memorandum Stock Account and Memorandum Markup Account. The gross profit that has been found out by preparing by these two B and C working notes, the gross profit that you find out by trading account is going to be same. That's an important understanding. Now after reading this sum, let me start with it and I would like to explain it. See, here I prepare Southern Stores trading account for the year ended on 31st of December 2007. This is a normal trading account which is a part of books of accounts. Here I prepare Memorandum Stock Account and Memorandum Markup Account. Now I read this theory part. Southern Stores is a retail store operating two departments. The company maintains a Memorandum Stock Account and Memorandum Markup Account. Memorandum Markup Account is just like adjustment account, and this Memorandum Stock Account is just like branch stock account prepared at an invoice price that you have studied in stock and debtor system in branch. The company maintains a Memorandum Stock Account markup for each of the department. Supplies are issued to the department are debited to the Memorandum Stock Account of the department at cost plus markup. So stock account is prepared at an invoice price, means cost plus markup, cost plus load, that is equal to invoice price. Cost plus markup is known as markup price. So the stock account is prepared at a markup price, means stock plus profit, that is just like invoice price. So here, opening stock, cost is given. You are required to add markup and write the closing stock here, opening stock here, and whatever the markup that you have added, that you are supposed to write here. Suppose that goods are purchased for department Y. The purchase is given to you at cost. Now purchase is at cost is debited to the stock account because stock increases. But this markup account, this Memorandum Stock Account is to be prepared at a markup price. So purchased at cost, to that you are required to add profit. And the profit will be debited here and it will be credited here. This is how opening stock. Here, cost plus profit value is recorded. Profit element is recorded here. Purchases, cost plus profit is recorded here. Profit element is recorded here. Closing stock, cost plus profit is recorded, closing stock here. The profit load here, profit element in closing stock is known as stock reserve, recorded here. But when the goods are sold, the sales is recorded at the markup price at an invoice price. So sales will be recorded straightway in the stock account. This is how markup stock account and Memorandum Markup Account is prepared. Now this is the details given to me in the sum. Now, first of all, let me concentrate on Department X. So, opening stock 24,000. This is a normal trading account where the stock is recorded at cost. Here is a Memorandum Stock Account. The stock is recorded not at cost but cost plus markup, cost plus load or cost plus profit. So, this 24,000. Cost is 100. Markup for Department X is 33 and 1/3%. So markup is 33 and 1/3%. So for 24,000, how much is the markup? You are required to add 8,000 is the profit. Now look at 24,000 plus 8,000. 32,000 is recorded as opening balance. Instead of 24,000, I write what? 32,000. And profit element is recorded here. So profit element of Department Y is recorded in Memorandum Markup Account. This is just like adjustment account. This is what you have really studied in case of stock and debtor system, in case of branch account. And if you want to refer to it, refer to my videos for stock and debtor system uploaded on YouTube. Now, purchases 1,62,000 debited here. Now here purchase of 1,62,000 plus markup will be debited. And markup will be credited over here just like stock. So here I write 1,62,000. This is the cost. Here also I have recorded cost. Here also I have recorded cost. But I will add markup. So what is the markup? 100 is to 33 and 1/3. How much for 1,62,000? 54,000. And this 54,000 is credited over here. So instead of writing 1,62,000 and 54,000 separately, you can have an addition of it and write a net added amount to the debit side of Memorandum Stock Account. But 54,000 you have to record here the profit element in the purchases. So purchase plus profit element is recorded here. This profit element is shown separately. But in case of 32,000, there was a profit element of 8,000. It is not shown separately, but it can be shown separately. Or either this 32,000 can be shown separately, 24,000 and 8,000, as you have done in case of purchases. Or you can have a total of 1,64,000 and 54,000 for these purchases. But you don't forget to write this profit element on the opposite side of this entry. So here the item is debited, so you should write the profit element on the credit side. So the difference between the two is the net cost that has already been recorded here in trading account. Now sales are credited. It is same way credited in the department wide. In case of sales, the goods are already sold and the markup or the profit is already earned. So no need to record it. So this is how X department items are recorded. Now I want to record Z department. Opening stock, trading account debit, same way. Opening stock, 36,000 plus profit element. Department Z has a profit element of 50% on cost. So let me prepare a working note for that. If cost is 100, load is, markup is 50. How much for 36,000, 18,000? So 36 plus 18 is the price at which the opening stock is recorded in the Memorandum Stock Account. So here this is, instead of 36,000, I have recorded 54,000. So profit load is added and the profit element will be recorded to the credit side in markup account. This is how opening stock is recorded at an invoice price or at a markup price. Now the purchases, 1,90,000. In trading account, you can debit at cost. Here also I have recorded cost, but you can write here in this Memorandum Stock Account 1,90,000 plus profit element, or you can show the profit element separately as I have done in case of department. Why? So I am going to do for the same for department Z. 100 is to 50. How much for 1,90,000? So 95,000 that I record here in this fashion. I demonstrate both the methods. Either write the total or write separately. It's fine. It's one and the same. But don't forget to write this 95,000 in this markup account on the credit side. Now sales. Same way trading account, and here also recorded sales. So this is how this first information given to me is being done. Now next. The stock of department Y, opening stock of department Y, 1st of January 2000, this opening stock 32,000. Includes goods on which the selling price has been marked down by 510. These goods were sold in January 2017 at a reduced price. So this 32,000 is the opening stock at a markup price, profit plus load price. But there was a markdown, reduction in the markup. By what amount? By 510. That was done. And in the opening stock, this markdown done in the previous year is given. So in the previous year, there was a markdown of 510. And so in the carried forward balance, also there should be a markdown of 510. There are two ways to record it. Either from 3,200, from this 32,000, deduct 510. And from this markup 8,000, deduct 510. That is one way, one style of recording. The another style of recording, instead of deducting from 3,000 to 32,000, deducting 510 from 32,000, write 510 on the opposite side and write 510 on the opposite side of this 8,000. So 8,000 opposite side, this debit side, write 510, or 32,000 opposite side, write 510. Or alternatively, you can deduct 510 from 32,000 and you can deduct from 8,510. That also can be done. That also I can demonstrate in one of the sums that I may upload in future. So 510 markdown I write on the debit side of Y department. This is the opening balance of markdown that is being recorded as opening balance. As this is opening balance, this is also opening balance recorded. Or alternatively, you can deduct from 32,510 or you can deduct 510 from 8,000. Both the accounting treatment is fair enough. Now, this is how. And these goods are already sold. So when it is sold at the markdown price, no, don't bother. Profit at markdown value is being earned and is already incorporated in the sales that we have recorded. Now next. Certain goods purchased in 2017 for 2,700 for Department Y were transferred during the year to Department Z, sold for rupees 4050. Purchases and sales are recorded. So purchase is included in the purchases, sales is included in the sales. Purchase and sales are recorded in the purchase department of Y and the sales department of Z respectively. But no entry in respect of transfer has been made. So certain goods were transferred. 2,700 for Department Y were transferred during the year to Department Z. So goods are transferred to Z from Y. Now in a normal trading account, goods are transferred to Z from Y. Debit the receiver, credit the giver. Z account is to be debited and Y account is to be credited. So this is a normal entry that is being done in case of trading account. Now what is the effect of this? Now Department Z is debited with 2,700. This 2,700 is the cost price. When you transfer goods, just like purchases, this 2,700 goods are transferred to Department Z. Z is the receiver, Y is the giver. In this Memorandum Stock Account, 2,700 stock will increase. So 2,700 will be recorded on the debit side, but it is at cost. This markup stock account, Memorandum Stock Account is to be prepared at markup price. So 2,700 if I record here, to that I am required to add the profit load, and profit load for Z is 50%. So I will record 2,700 here and the 50% profit load will be added, and that 50% profit load will be recorded on the credit side. One thing. This 2,700 will be recorded on the credit side of Department Y. So goods go out of the Department Y, so it should be credited. The credit should not be paid at cost. The credit has to be paid at the market price. And the market price is 33 and 1/3%. So here 2,700, 33 and 1/3% markup will be added. So 2,700 plus markup. And the markup that you have added here, for that you are required to give the opposite effect to this Memorandum Stock Account. Now let me do that. So Z is the receiver, Y is the giver. Now this is at the cost, this is also cost. This cost you can't write. You have to do markup. So here also you have to do markup. So 100 is to 33 and 1/3. How much for 2,700? 900 is the markup. So this 2,700 plus markup, and markup is also debited, adjusted. So this is an adjustment account. Here the profit load is added. Here the adjustment is made 900. Similarly, this 2,700 is the cost. There you have to make a markup of 50%. So 100 is to 50. How much for 2,700? 1,350 is the markup. So here the goods transfer is recorded at a markup price, at invoice price, and the profit element therein will be recorded in this adjustment account or markup account 1,350. This is how adjustment entry is recorded for this given adjustment. Very important. Now, this is the markdown for Department Y. When there is a markup, stock account debit, markup account credit. Where there is a markdown, opposite effect, stock account credit, markup account debit. Listen once again. When there is a markup, load is added to the cost. Here, goods given are added with the profit and credit effect is given here. But when there is a markdown, the opposite effect is to be given. Now here there is a markdown, Department Y, markdown is 800. So where there is a markdown, Y department account debit, here credited. Remember, there was a markdown of 510 in opening stock. We have recorded the entry debit and credit here. Here also there is a markdown of the goods available for sale. Same way, 800 entry is to be recorded exactly in the same lines that you have understood for 510. Similarly, 4100, markdown, Z, markup account debit, stock account credit, 4100. Now, this is how this effect is given. Now, the most important is the last adjustment. After markdown, if the goods are sold, fine. The profit earned at a markdown value. But after markdown, if the goods are unsold, markdown goods are unsold at the end of the year, for that you are required to write the adjustment entry. And that I want to explain you now. At the end of the year, there were some items of stock of Department Z which has been marked down to rupees 2,300, which has been marked down to rupees 2,300. So this 2,300 is a marked down item unsold at the end of the accounting period. Is a marked down item unsold at the end of the accounting period. For that, you are required to write the adjustment entry. That is very important. Just observe. Now, this 2,300 is a segment of this 21,000 and 4,100. So I would like to prepare a working note for that. What has happened with this 21,000? The cost is 21,000. It is a Z item, so 50% load was added. So its valuation was originally made at 31,500. After making a valuation of 31,500, there was a markdown of 4,100. So markdown of 4,100. So after markdown, the value was 27,400. This is what has occurred with this stock. 21,000, there was a markup of 50,000. Subsequently, it was decided that these goods has to be reduced so that it can be made saleable, and for that there was a markdown of 4,100. So now the value after markdown is 27,400, and this 2,300 is a segment of this 27,400. Now 27,400 and this 2,300 is at par value. Now I want to find out the profit element markdown in this 2,300. So 27,400, the markdown there was at 4,100. What was the markdown in 2,300? So this was the markdown in this 2,300, 344. Now if you want to value stock at cost or cost plus 50% in case of markup stock account, this markdown 344 is to be reversed. When the markdown of 4,100 was made, what was the entry? Here debit and here credit. Now this is to be reversed as the stock is unsold. So when you want to reverse it, so write an entry reverse to this 4,100, and reverse entry is here debit and here credit. Now when you reverse the markdown, then stock are stated at original markup. Then the stocks are stated at original markup. That's an important point. Now whatever the goods are left has an original markup of 50%. That's an important point to be understood. Now this is how this adjustment entry is recorded. Now practically all the points are covered. Oh, of course there is a loss. Now during the stock taking, on 31st of December 2007, goods had a cost of 240 were found to be missing in Department Y. In Department Y, there is a normal loss. Normal loss is to be credited at cost to the trading account. So this normal loss, its cost is credited here, but in case of this Memorandum Stock Account and Markup Account, its effect is to be recorded with profit element, because goods were purchased, debited with profit element. So when goods go out of the stock level, then also it should be recorded at the markup price. So 100 is to 33 and 1/3. So 240 is to 80 was the markup value. So markup value is to be, so 240 plus 80, so 320 is the markup value of loss, and the profit element therein was 80, that is to be adjusted, that is to be debited to adjustment account. This is how loss is to be accounted for. Now, loss should be irrecoverable, so it is treated as normal loss. Now, closing stock of both the departments are to be valued at cost for the purpose of annual account. Now, closing stock is to be valued at cost. At cost in case of trading account, at markup value in case of markup stock account, and that's why we have recorded a reverse entry for this 344. That's an important point. Now, all the points of the sum are taken care of. Now I would like to close this stock account first of all. So, total of debit minus total of credit, that is known as closing stock. This closing stock is at a markup of 33 and 1/3%, and this closing stock is at a markup of 50% because it's a closing stock of Department Z. So this closing stock at markup price is worked out. Now closing stock is at the markup price, is with profit load, and in closing stock whatever the profit element is there, that is an unrealized profit, and we are required to create a stock reserve for the unrealized profit. So I would like to find out the profit element in the 32,770 and profit element in this 54,294. This is a markup value. It is not cost plus profit value. So I want to find out the profit element therein. So cost plus markup value, that works out to be 133.33. If 133.33 is the sales value, then load or profit is 33.3. How much for 32,770? So here you will get the profit element in this markup value. And this profit element will be recorded as closing balance, just like stock reserve. Now 100 plus 50, markup value is 150 here. So 150 is to 50 profit load. How much for 54,294? So here the profit element in this stock is 18,098. This will be recorded as closing balance in this memorandum markup account. So this is stock reserve for this closing stock at markup value. Markup value means cost plus or profit. The closing stock is an unsold item. When the item is unsold, profit is not realized. So there should be a stock reserve for that. And that stock reserve balance is 8192 against the 32,770. And this is the stock reserve for this 54,294. Now I close this memorandum markup account. If you remember, when we closed the adjustment account in case of stock and debtor system of branch, we got the gross profit. So here by closing this markup account, we will get the gross profit. So 62,000 minus all these things, you will get the gross profit of 51,518. And here also, if you find out the gross profit for Department Z, it will work out to be 92,496. This is how the gross profit is worked out. Now these are the two working notes. We have already found out the gross profit in this working note. Now I want to find out the gross profit in this trading account. But in trading account, I am required to write down closing stock at cost. So this is the markup value. This is the profit element. Difference between the two is known as cost. So let me find out the cost of stock in Department Y. 32,770 minus 8,190. So this is the cost. Valuation of closing stock at cost. This is the valuation of closing stock at markup price. This is the stock reserve created there against. So markup value minus stock reserve is equal to cost. And that cost I would like to record to the credit side of my trading account. Same way for Department Z. 54,294 minus 18,098. You will get the cost of stock 36,196. So this closing stock at cost is recorded in this trading account. Now I would like to find out the gross profit in this trading account. So total of credit side minus total of debit. If you work out the profit should be exactly same. Work it out. 51,518. Here 3,21,196 minus this, so profit is 92,496. Now compare these two profit, it is same. So here the profit is found out by preparing normal trading account. Here the profit is found out by preparing Memorandum Stock Account and Memorandum Markup Account. Same way, the profit tallies for Department Z2. This is how gross profit agrees, gross profit found out by normal trading account, gross profit found out by preparing Memorandum Stock Account and Memorandum Markup Account. It agrees. It is a confirmation that we are right for the sum. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all of you. But over and above this sum, I am going to upload one or two more sums of this type for the better understanding of the student. Just look forward for that. I feel you have followed all these things. Thanks to all.